Welcome to ONS Energy Talks. My name is Ingvild Meland and I'm the Program Director of the ONS Foundation. Today we will talk about the climate change, energy, climate, and we'll touch on the drivers that are driving the renewable market development. It's a great pleasure for me to have with us Gry Johanne Åmodt. She's the Vice President for Global Drivers, Corporate Strategy and Analysis in Statkraft. Welcome, Gry.
Thank you, Ingvild. It's good to be here.
First and foremost, how are you doing in these days of great uncertainties?
Thanks for asking. It's strange times indeed. I'm well, and I'm also grateful that everybody close to me are also fine. But of course, it's challenging with the uncertainty, especially not knowing how and when this situation will last. And it affects my job. As you can see, I'm in my home office, as almost everybody else these days. But it's also affecting the analysis I'm doing in my job.
And speaking of that, you're responsible for monitoring and evaluating the global drivers and effects on your company's strategy. Elaborate a little bit on what you're doing these days.
Yes, my team is responsible for having a view on the development of the whole energy system on the long term, which is up until 2050. So in general, we do a lot of very detailed analysis in order to come up with this view. For instance, really detailed analysis on wind technology development on the horizon, on what do we think about EV development going towards 2050. And all these analyses are, of course, based on what we see today, but also, importantly, what we believe for the future when it comes to politics, technology development, and also, quite importantly, practical limitations to the rollout. So then we take this view and detailed analysis and aggregate it up to a consistent view on the energy system going forward. So a lot of very deep analysis and aggregating that up to high-level discussions on the totality. And of course, the corona is affected now, and one of the most important challenges is to have a view on how long the effect of corona will last and how severe the effect on the economy and hence the energy system will be.
So that sounds very interesting. You're kind of looking into the crystal ball and predicting the future. What would you see? How do you see the link between energy production and consumption and the climate change challenge from your point of view, looking into this crystal ball?
Yeah, that's a big, complex question. But one thing that's for sure is that 75% of the greenhouse gas emissions, they are energy related. So the climate challenge is first and foremost an energy challenge. That's kind of fact. So to address the climate change, the emissions from energy usage needs to be reduced. And when we know how closely linked economic development has been to energy usage, fossil energy usage, historically over the last centuries, it seems impossible to do anything about it. But we strongly believe that that is possible, and that's based on the development we've seen the last 10 years, especially on the technology side, also on the politics side. And we think that this has changed the premises, the old premises, for how the energy system can and also will develop going forward.
The energy system is for sure changing, and due to climate change, due to improved competitiveness in the renewable sector, and also because there's in some parts of the world at least a high willingness to really push forward the energy transition. Could you elaborate on how you see the most important developments in the energy sector going forward?
Yeah, you're right. We've seen actually quite significant political efforts to cope with climate change over the last decade, especially within the power sector, where we have seen substantial support to renewables, to wind, to wind and solar, and this has led to a massive deployment, at least relatively to what it was, of these technologies. And this again has led to learning and improvement of the technologies, giving a rapid cost decrease in wind and solar. So the last decade, the cost of wind has fallen by 50% and the cost of solar by 80%. That means that you can build 5 solar plants today at the cost of 1 10 years ago. So this has a huge effect on the power system and the whole energy sector. In the power sector, we are now in a place where it's, in most countries in the world, cheaper to install new renewable capacity than to install new fossil capacity. And that's kind of a new way of thinking about the power sector. And this also has implications beyond the power sector, because we now have low cost, zero emission energy available in the power sector. And that also affects the energy intensive sectors outside the power sector, which is mainly transportation and buildings and industry. So when we run our energy system models, we see that when possible, electrification is the cost optimal way of decarbonizing transport, industry and buildings. And of course, the development within these sectors haven't gotten as far as the power sector. We have seen quite some development within the transportation sector. Battery costs have fallen by 80% the last decade, and an illustration of things happening there is that 10 years ago there were 7 different EV models available globally, and in 2020 we expect over 280 models. So a lot of things are happening. In some areas we are getting close to cost parity of the sustainable renewable solution compared to the fossil solutions, for instance within EVs, but we still expect that a lot of political support and public push is still needed to get a lot of electrification. So we are very uncertain about kind of the pace at which this is happening.
Before we jump into more on the electrification of the system, I just want to dwell on one thing, because I hear a lot of people talking about the energy storage and the batteries being kind of one of the jokers in the system. Could you elaborate a little bit on how Statkraft is seeing this and kind of at which scale you are working with that?
We see in the power system, of course, it is a challenge if more and more power generation gets intermittent, which is solar and wind, of course. We see that a lot of grid and cables will support that to quite a degree, and we can live with quite a high share of intermittent generation in the power system without any challenges. We see up to 70-80%. But of course, we need something to provide power the weeks during the winter when the wind doesn't blow and the sun doesn't shine. Batteries are very well suited for short-term storage, but not for those weeks. So that is a challenge, and hydrogen might take a role there. But of course, we are very lucky in Norway, where we have a lot of very big storages of energy in our hydropower reservoirs.
Thank you for that. Let's jump into the electrification, where you ended up before I asked you about batteries. Electrification will happen, as you say, whereas in sectors where it's doable and where it's competitive. But how can we work with other options to secure low carbon solutions, hydrogen, etc.?
Yeah, no, we expect hydrogen, as I already briefly touched upon, to take a quite central role in the future energy system, because it's flexible, it's storable, and it can be used in a lot of the sectors. So we think that that will be important, especially where direct electrification is not possible, because hydrogen is more expensive, or depending on source and how you get it. In general, more expensive, but for sure relevant. And we expect hydrogen both from renewable power by electrolysis and also from natural gas with CCS. And we also expect CCS to come to a degree. We think it looks like an expensive solution also on the horizon. So we think the deployment will be limited, but we think that it will definitely be a part of the energy system going forward. And it's needed, especially if we're aiming at 1.5 degree warming.
You underline that in kind of that the renewable energy is the most competitive option when building new power capacity. What about the huge already installed power capacity where coal and gas and oil is part of the basin in the power production? How do you expect this base to develop going forward? And do you see investments coming in that sector as well?
Yeah, that's a good question, a very complex question, because the existing capacity is ranges from very good plants to very poor plants, and they differ in locations and so on. For instance, a new efficient coal plant located close to a domestic coal mine in India will probably run for years to come. And it might also pay off to refurbish and maybe also build new plants there. That might be one of the cases where that might actually pay off. But if you have an older, more inefficient plant running on imported coal, internationally traded coal, that will probably soon be outcompeted by renewables, and especially if you are in a sunny or windy location.
So you're saying that depending on kind of where your competition are coming from, so if you need to buy your coal in international markets, then you will rather choose other sources going forward.
Yeah, because coal is more expensive, and then the competitiveness is poor.
I mean, we need to talk about the COVID-19 situation as well, as you mentioned. That is an important part of your analysis these days. Because it's creating a lot of uncertainty when it comes to energy and financial markets. Which concerns do you see coming out of this situation?
No, of course, we see or we expect the economic development has a huge effect on the energy demand. And it's interesting to try to understand for how long it will last and when it will pick up. Of course, it's an interesting case though, because it's an economic downturn that's not driven by an economic underlying challenge. It's driven by a health crisis. And that adds to the uncertainty as to when and how the economy might recover and how fast it might happen. But of course, lower energy demand affects the fuel prices, and that we see already, right? That the prices are really low, and that affects the renewable competitiveness compared to fossil alternatives. So as I said, interesting to understand for how long this will last. We also see, of course, that if there is less economic power in general, there might be less power to address climate change. There might be a shift of focus from climate change towards economic development and recovery, which is, of course, natural in some places at least. And we might also see focus on recovering from the health crisis. But of course, there's some other items or factors that might also affect the energy system. We might see green stimulus packages that might affect. And we also have a more high-level factor, which is kind of the geopolitical development, where we might see more protectionism and nationalism as the consequence of COVID-19, and a wish to be more self-sufficient also when it comes to energy, which in practice in most countries actually means renewables. Last year, more than half of the energy globally was produced by 6 countries, whereas most of the countries in the world have good renewable resources available. So that might also affect.
And there's a really interesting that you start talking about the geopolitical picture. I mean, we've seen what's been happening in the oil market lately, and kind of moving from energy production into to great politics. And as you say, as the nations get more nationalized and kind of securing their energy internally, they need to take the sources they have, and they all have sun, and they can use renewable power. And dwelling with the kind of the financial markets and opportunities, great leaders have said that you never should waste a good crisis. Are there any other opportunities coming out of the situation that we see now, as the way you see it?
Yeah, no, I think especially the economic stimulus packages are very interesting. As far as I've understood, at least parts of the deployment of solar in Germany was a consequence of stimulus packages after financial crisis. So we expect these stimulus packages to be forward-leaning and set to accelerate development, which and of course we would expect the renewables and sustainable solutions to be very well positioned to receive capital from these packages. So that will be very interesting to see how different countries position themselves there.
And I mean, getting access to the project funding, whether it's the stimulus packages or in general, is of course crucial. And there has been a major shifts in over the last years on how the financial markets are seeing a sustainable investment and being ESG compliant. And how do you see this picture?
No, I believe that will be one of the main drivers actually in the energy transition. We see, as you say, to an increasing degree that investors invest in business that is ESG compliant, and we expect that to continue. And another very closely related effect is that we, to an increasing degree, expect investors to take climate risk into account when investing. And at least some of the fossil projects, we expect that the profit gets more and more uncertain as we move towards a zero emission society. And we think that this will shift money away from fossil investments towards renewable investments. We see already today are the investments in the power sector at the same level as investments in the fossil sector. And when we analyze, we see that towards 2050, we think that more than twice, or investments in the power sector might be more than twice the size as investments in the fossil sector. So that is, of course, a very big change.
So I think this is really important. And I've heard someone in Statkraft saying it's far cheaper to avoid climate change than to cope with it. Is that something that you can link to?
Yes, actually, we every year in Statkraft we issue a low emission report where we, amongst other, have some deep dives into topics of interest. And last year that was one of our main analysis, where we actually took a look at the costs of trying to cope with climate change, investing in renewables, hydrogen, and CCS, as we have already discussed, and compared that to costs of not coping with the climate change. And we saw that the costs of having to deal with the consequences of climate change was much higher than the cost of actually trying to transition the energy system as fast as possible. So that's right.
I think this is a perfect conclusion to our great conversation. I've heard that you say that the climate change is first and foremost an energy challenge, and that both political willingness will be important going forward to really push the energy transition even faster, and that financial markets will be one of the main keys in order to get there. So thank you, Gry Johanne Åmodt, for joining us from Statkraft, and thank you to the ONS Energy Talks listeners. It was great having you all on board. Thank you.